we're going to get hot and heavy into this, all right? So with all of that being said, with all of the people who are here, all the new people that are here, all my regular people that are here, man, I'm watching the views that we get on a weekly basis is just getting better. What's going on in the market? That's where we start. We always start every week of what's going on in the market. And this is a place where you can get a real feel of what's truly going on in the market. We all know that the market looks tough. A lot of the country is on lockdown because of social distancing. A lot of people working from at home. And now we're getting into the point that we're looking at hopefully opening up the country soon to help our economy, to help. And people are now starting to get stimulus checks. So there's a lot of things, and you're going to get caught up in the whirlwind of things that are going on. Let's start with the homepage. As you open up the VectorVest software, for those of you who are not subscribers to the VectorVest software, you can take a trial. Joey's going to put a link in the room for those of you who are not subscribers, where if you want to take a free trial to the software, this is where you click on that link to do so, all right? This is the homepage of the VectorVest software. We can see what's going on in the market today. As you can see, all of the major indices, we are mixed. The NASDAQ is slightly up. And someone says, what's holding up the NASDAQ? Probably one of the bigger tech stocks is what's holding up the NASDAQ today. Remember, the NASDAQ looks at about 4,300 stocks, but it's very tech heavy. Could have been Apple, could have been Google, somewhere along those lines. I'd probably have to take a look to see what's keeping the NASDAQ up. How about the S&P 100 just went and flashed positive? Today is a mixed day. The Dow is leading the charge to the downside, though, down 167 points. So I knew that with the news going on in the market, with the jobs number yesterday, with the retail numbers, we were probably in line for a day or two of the market pullback. We're going to talk about that in a second. All right, so we can see currently we have a mixed market. Looking at our daily market timing or micro timing gauge, because we are one tick into the red, the color guard is mildly bearish. That's because our relative timing indicator has fallen on a week over week and day over day basis, now flashing a red light. This looks at the short-term price trend of the market, folks. Tells me if the market is in an uptrend or not. Cast on a scale between 0 and 2. The market has been in a downtrend, but it was getting stronger, and for the last 2 days it has pulled back, thus now flashing a red light. The price of the composite is higher on a week-over-week basis, but lower on a day-over-day basis. The buy-to-sell ratio is higher on a week-over-week basis and actually higher on a day-over-day basis, but because this indicator is below the value of 1, it still flashes a yellow light. If you're in the market right now, and this is more so for the benefit of the people who are not subscribers to the software, if you are in the market right now, our color guard is our traffic light into the market. What is the main color you see in the color guard? Yellow. If you're in the market, this is a time to be cautious with your stocks. Not telling you to close them out. I am telling you to tighten the stops on those stocks. Why? Because we're still in a volatile market. The market's up one day, down one day, up one day, down one day. And with that volatility, it's volatile because there's uncertainty in the market, and markets don't like uncertainty. COVID-19 has got us by the, wow, I was going to say a couple of different things. I'm being easy. It's got us by, it has handcuffed us as an economy. And at this particular point in time, any news, whether good or bad, can move the market on any given day. 2 bad days of news, retail sales yesterday, jobs report today, both of those have affected the market adversely. But there's a lot of silver lining right now, a lot of the flattening of the curves of the COVID cases all over the United States. Thus, we're starting to think about reopening, but we'll see how that works out. All right? So,
what causes RT to go red again?
What causes RT to go red? Well, any one of these indicators that go red means that the indicator fell on a week-over-week basis from 0.77 to 0.75, and then also fell on a day-over-day basis from 0.77 to 0.75. When the indicator falls on both a week-over-week and day-over-day basis, it will give you a red light. Thank you for that question, Joey. All right, notice that the buy-to-sell ratio didn't do that, but it would have flashed a red light if it went down on a week-over-week and day-over-day basis. And the same thing with the VectorVest composite. All right, with all of that, let's start talking about what news is affecting the market. Let's go to our first news story. All right, and what I'm going to do is, before we do anything, and this happened today, the jobs report came out. I didn't put a story in because all of these stories are already made throughout the week prior to today. But the unemployment numbers came out. 5.5%, 5.5 million people signed up for unemployment. I think we're sitting at about 22 million folks out of work. That's a lot of folks. So the coronavirus closures froze swaths of U.S. economy in March. So, man, it is just tough. A lot of people out of work. I'm hoping that the stimulus checks, or at least tiding people over for a little bit to help them with some of their bills. I think that the government, at least doing that. Understand, I've been talking over the last couple of weeks that the Fed has said they've opened up the spigots of everything that they can do to make sure that the economy stays afloat. So they are buying bonds, they are buying debt, they're doing everything that they can, and now the IRS is putting out the money. That's part of a $2 trillion stimulus package, the biggest by far has ever been put out. So the Fed is dipping in all of its tools to help us out. If we scroll down a little bit, large chunks of the U.S. economy froze in March as the coronavirus pandemic closed malls, restaurants, factories, mines, causing Americans to cut retail spending by a record amount and the country's industrial output to plunge at its steepest rate in more than 70 years. So that's what's going on in the market. Why did that do that? Stop it. 70 years. That's huge. That is huge. All right, the next story, talking about the coronavirus economic reopening will be fragile, partial, and slow. And I think that needs to be done that way. If we're going to reopen because we think that everything is good to go, folks, don't get complacent. All right, just think that, all right, everything's good to go. Let's go. Woohoo! Party, party, party. Listen, it needs to be done systematically. Walt Disney reached a coronavirus milestone of sorts last month when it reopened a portion of its Shanghai Disney resort as China's pandemic began to ebb. All right, so I think that as we start to reopen society, it will be done partially, it will be done slow, but a trip to Tomorrowland may never be the same. Guests at the Shanghai resort, and look at this, must wear masks at all times, removing them only for eating. So now, in order to open up, there are some things, precautions that still need to be done. Because we don't know that as we open up, if we can get a relapse of what the coronavirus has already done and even become worse. Keep that in mind. Keep that in mind. All right, hours and capacity are limited, and just to gain entry, visitors must submit to a temperature check and present a government-controlled QR code on their phone that indicates they are virus-free. I don't know if we're going to get to that extreme here in the United States, but man, society, based on what we've gone through, is going to be totally different once we open back up. We're going to open up to a whole new society. I'm just thinking that. That's not doom or gloom. That's just facts, folks. This story in and of itself is pointing to a lot of things that as the country opens up, what's going to go on. All right. So those are my two stories. To include the jobs report actually makes three stories, but this is what's going on in the market. So now we're going to go back to the software, and I'm going to open up our watch list of stocks that we have every week. We have a list of stocks that we take a look at as far as stories-wise, but we always take a look at the Spider and the VVC. Those are the two indicators that we can use to look at what's going on in the market. For those of you who are not subscribers, we use the VectorVest composite, which is an arithmetic index average of all of the stocks that we track. Currently, folks, we track over 8,100 stocks in our VectorVest composite. The Spiders track what? 500 stocks. Because we track as many stocks as we do in our indicator, we feel that it is a better representation of broad market movement, and we use it for timing the market. Let's take a look at these two. So there's the Spiders and the VectorVest composite. Let's open that up. Put this on a 3-month graph. Let's go put this graph layout on the VectorVest layout. Look at that. The spiders coming off of, and this is what I've been tentatively calling a market bottom, was on March 23rd. March 23rd, the market fell after all the coronavirus. What I'm looking at is a 40-day moving average, the simplest way to have gotten out of the market prior to now. How about the price of the composite falling below the 40-day? Wow. And look at that since then. Then we've now jumped above the 40-day. We are trending higher from the low on the spiders, but look at that last couple of days pulling back towards the 40-day moving average. And just be careful. Someone said to me, I did a training for someone today. Hopefully they're here. Jeff, if you're here, say hi. I did a training for someone today, and he said to me, is this a dead cat bounce? And you know something? I'm not sure. I'm not sure if I'm ready to call this a dead cat bounce. Let's draw a freehand line from the low. Here's my trend line. I can draw a trend line on the spiders anywhere. All right, I can draw a trend line on the spiders anywhere. But here's my trend line on the spiders. And where are we coming back to? That level of that trend. What should happen if this is a good trend line? It should bounce and keep moving up. Or if it falls, the market's got more downside. And Jeff's question about this being a dead cat bounce could be in play. Could be in play. Let's go look at the VectorVest composite. There it is. I'm going to draw another trend line connecting the lows. All right. And there it is. We're still above the trend line. The VectorVest composite, as opposed to just pulling back, is moving a tad bit sideways. Yesterday's down day, retail sales. Today's down day, unemployment number. But notice that the candle for the unemployment news is not nearly as bad as yesterday's retail numbers. I'm thinking that a lot of people knew that the unemployment number was going to be high. So it was sort of kind of baked in. But we do have a trend line. And keeping on top of the trend, how about RT moving higher as the market moved higher, and now it's starting to pull back. The trend is dissipating. And I can put other indicators. If you're a subscriber, I am doing the special presentation this week, and it's all about following the trend. So make sure you're there for that. All right. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.